All right, Drew Rathkeber here with Steve Way for this week's kind of end of week of things that we're kind of looking at. We just want to give you some general ideas of some markets we as APs or brokers are looking at, or as a business owner is looking at, and what to look forward towards next week. But we'll go ahead and start with Steve. I know he's been eyeing this platinum trade for 4 or 5 days. He did post a trade today. So why don't you go ahead and talk about this current platinum setup for the April platinum?
Sure, Drew. Yes, I look forward to this trade every year because it's like clockwork. Just like Christmas rolls around every year, platinum season rolls around also. And so platinum is in a seasonal timing pattern right now. In 15 of the last 15 years, if you bought platinum on December 6th and held it into January, it was a profitable trade 15 times. So it has a very good track record. And if you understand the way that I look at trading, I'm kind of a cycle trader. So I like to buy low. And you can see that we're right now getting down near the contract lows. And so we're getting near a cycle bottom, most likely. And this is lining up with the seasonal pattern. And so that tends to help you that puts the odds to your favor that we'll have a profitable trade. You can see we're near the low from a few weeks ago already. And if you buy platinum now, if you bought a small position now with a stop just below that swing from a couple weeks ago, you're not really risking very much, given the amount of potential that this trade has to go. I think that we ought to be able to get back to the September peak pretty easily. Drew, I think there's another slide there that I provided. So you can see once platinum gets to these lows, it tends to explode out of those lows. And so a 120-point move doesn't seem that ridiculous if you look at the explosive nature that platinum has. Once it finds its bottom, it'll roar out of there pretty good. So you could take a trade right now with a stop pretty close to where you enter at, and not really risk much, but you have the opportunity to take advantage of the explosive move. Platinum's not trending. It hadn't trended now really in years. It's done more of this chopping type of trade. It's not like gold and silver are right now, where you've got trends established. And so I'm not expecting that you would buy platinum and then hold on to it. My expectation is that you'd hold it into January and then tighten your stops up once the cycle peak, the timing arrives for a cycle peak, and then you start tightening the stops up. So when you enter trades, it's always scary. That's the right time to enter those. You want to enter when you're scared, and you want to exit when you're starting to feel greedy. So once we get into January, I think it'd be the time to be tightening up stops and thinking about how you're going to exit.
I have to agree. What's interesting about platinum is it used to be the leader. This is going back 15, 16, 17 years ago. It was always double the price of gold. And it just truly shocks me to look at it, these 940, 950, 960 levels. Meanwhile, gold is, 2650, 2700. When we used to, back in the day when I first entered the business 20 years ago, we used to call platinum the leader of the kind of a leading indicator and how it's reversed roles in the last decade or so. So I have to agree with you at this 940, 950 area at these lower levels. There's a great opportunity right here. I mean, overall, like with silver, it's completely undervalued when you compare it to the price of gold, and that's been the leader so far. So I think that's a fair play to look at.
Right. The gold silver ratio is very favorable to silver. I tend to prefer to have silver right now than I do gold, but the gold to platinum ratio is just ridiculous.
Yep.
And so, but it hadn't established the trend yet, so I have a hard time recommending people to buy that. I'm a lot more interested in silver or something.
Yeah. Like I say, risk management is the name of the game. So let's go ahead and All right, so let's go ahead and take a look at the July sugar. You've got an interesting setup here. Looks like a bull flag getting ready to be put in place.
Yeah.
Let's go and talk about this one.
Yes, that chart was from last night, and today the price moved up pretty close to the top of that channel. And so, if we break out of that channel, I think we could expect to see a bold move. Probably 4.5, 5 points, something like that. Each point on sugar is $1,120. That would be a trade that could be very profitable, and you can see kind of where that horizontal support I have drawn there in the green horizontal line. You could put a stop right below that and manage the risk on the trade pretty easily.
Yeah, and I know you've been looking at this one as well.
Mm-hmm. Yeah, the chart's not that impressive, but again, we're talking about another one of those commodities that has very strong seasonal tendencies. I think cotton has most likely made a low right during the time when the seasonals are starting to pick up. And usually December and January and February are good months for cotton. I think a modest move would be, going back to the September highs there. So that's another one to look at and keep your eye open on. So this is not the best time of year for sugar, but it is a good time. The best time for sugar, you can see, typically happens later on. But this little spell between early December and mid-July and mid-January tend to be, you have a little window there that's usually a good time to buy sugar. But the most impressive thing about sugar I saw was just the giant bull flag and the channel that sugar's trading in, and when it breaks out of that trading range, it'll really go.
Yeah.
Okay. So this chart shows the cotton has a very strong seasonality from early December on into on through January, and this is what's most impressive about cotton, and it's followed this tendency in 14 of the last 15 years, and so it has a very strong seasonal tendency. This is more impressive to me than the chart is, but also the fact that that cotton right now is down near a major low. You can manage the risk on the trade right now pretty easily by putting a stop just below the swing low.
Excellent. Well, good analysis. So let's go ahead and take a look at some things I've been looking at. For instance, right here, we've got copper on the daily, and Steve and I are a little bit different. I use my good old 15 and 45 moving average. It's a very simple strategy. I try to keep it simple because just sometimes we get too much conflicting signals tossed at us. But right now, you can see we've got a shorting or semi-short opportunity coming right here on the daily. If I go and jump into the weekly, let's take a look here on the weekly. And we're getting a fresh cross actually to the downside here on the weekly as well. So there could be some downward momentum on the copper market. If it were to pop up a little bit, say 428 or so, 427, that I possibly look to get short in that area based on that analysis. Let's take a look at gold. Gold, I know, has been in this weird sideways chop for some time, and a lot of my clients have been complaining that we've just been going sideways. Now, here's an interesting thing. The indicator, the 15 and 40, is kind of going sideways as well. I know on the weekly it's straight up. In my personal opinion, I think it's getting ready to make another move higher. That's just my personal opinion, because if you look at the last 6 or 7 trading days, these lows are slowly but surely getting higher and higher and higher right here. So I just think got to get over that 20, let's say that 26.94, 95 area and look to get that thing pushing back up. I think it's going to go re-challenge eventually those highs at the 2,800 area. It's just my personal feeling. It's just consolidating at this moment in time is my thoughts on this one. Let's take a look at crude oil. Stage two. So crude oil is another market I've been really looking at here. So this is, as you can see, we've got slightly higher lows in crude oil. This is this is January crude, by the way. So what I think right now, and actually just had a client call in, pick up some at this level, but this is a market I would definitely be taking a look at as well. As I was looking at earlier this morning, it's just really far down there, especially when you compare it to the stock market, strong stock market. Now, if the stock market had a huge correction and we had a free fall, then all bets are off. Crude oil could come down further, and don't forget it did go negative at one time. So you still got to really manage your risk within that trade.
Well, you definitely want to take a crude oil at the bottom of that range because it has been making slightly lower highs also.
Yep.
But if you can catch it right there at that bottom, if you even put a stink bid in if you want, hopefully getting something up right there at that bottom, you can manage the risk from there pretty easily.
Yeah, you really could. From this perspective, you had one of those major dips down here where it went to 64 and change. But saying that from right in this area, if you manage it, it's not a bad play to be looking at. But let's take a look at another market. I've got large clients that trade a lot of bonds, but we're getting an interesting setup on the daily. Quite the reversal that we're getting right now on the bonds. So we really came off from that really high, and this is March bonds, by the way. But from that 127.20 area, it really just completely dropped as we were ratcheting up interest rates and really trying to tamper inflation. And now they're trying to get the economy kind of going because things have slowed down, in my opinion, so much. Even though the stock market is at these record highs, people I talk to on the street, the economy has definitely, for instance, my father, his company has really slowed down. So they're going to try to get the money and the printing press going again. And in saying that, they're going to have to drop interest rates, so you're going to have higher bonds. So this is one I wouldn't buy necessarily at this level, but just keep an eye on it for a pullback and look to possibly get this along this market. But just a good indicator to kind of look at the overall theme of things right now. So
what's your moving average? What's your moving average you're using there?
This is just the 15 and 45. It's just my trusty basic 15 and 45 that I'm using. But really for me, what I like to jump in and out on is I'll do a weekly. So you can see weekly still way down, but this isn't the way this is actually moving this much volatility is not a great place to analyze it. So you have to dig into a smaller time frame. And I tend to trade off the daily, the 4 hour, the 2 hour, and so on, and then trade off those charts. The weekly, I don't really trade off that too much. So that's what I'm using on this. So do you have any other comments there, Steve?
No, I've traded bonds using the 10-day moving average. And a good time to buy on bonds is when the price kisses off that 10-day moving average, and it would be the same way with the 15, but it tends to pull back into that 10-day moving average, and then you get another pop up higher, and then I like following that with the stop just trailing underneath that 10-day moving average as it moves higher.
Yep, that's basically kind of what I do in these situations, and like I do say as my clients, all indicators work till they don't work, and it's just a matter of managing that risk. But looking for those good entries. I noticed with your trading and as well as mine, placing those, not really doing so much market orders, just kind of waiting for the market to come to you. That's what I've seen the most success with a lot of my clients. I'm not against market orders completely, but in saying that, a lot of the best trades that I've noticed is people actually waiting for the market to kind of come to them.
Yeah, I think that's wise. 5 years ago, the markets weren't as volatile. And you can go back and look at if you can zoom out a chart and you can see the volatility in the daily and weekly movements wasn't nearly as wild as it is now. And so, and so these low ball bids that you put in, sometimes you get one hit, and that really helps a lot. It also helps if you buy something like that, you're not going to be as nervous holding on to the position. You tend to get the trade into the black quickly, I mean, every now and then, I mean, you'll miss out on something, but you won't be as nervous holding on to those positions if you're doing it that way.
Well, I have a saying for that. I have a lot of clients that, the FOMO or fear of missing out. And I always tell my clients, missed money is not lost money. So the fact is, part of this game is you're going to miss moves. But I see it too. I deal with my clients where I can tell on the phone, they're just emotionally drawn in and are panicking. And I can tell that's going to be a bad trade just by their sheer emotion within trying to get into the market, Um, just my observation when the markets are quiet, nobody's talking about it. That's when you kind of want to start looking at that market. When it's all over the news and going ballistic, that's typically where, you get the sheep kind of running in. And that's when I personally start kind of pulling away from that market. Like Bitcoin, for example, I wouldn't touch it at these levels. Just wouldn't.
Yeah. I'm starting to hear people talk about two markets a little more than I would like. One is Bitcoin, the other is the stock market.
Yep.
I'm hearing people that are in both of those markets and they're all thumping their chest and feeling really good. And I have some stocks and stuff, and I feel pretty good about it. But I'm also I'm becoming very paranoid. I know the PE ratios right now on stocks are at the very top of the range of what you normally normally what you would see in a bull market. It's really a lot closer to what you would expect to see at the beginning of bear markets.
Yeah, and I have to agree with you. The stock market, the valuation, just the overall valuation, and you see what's going on in the street right now, does have me concerned. With the labor market and so forth. I think eventually it's going to have to come off, and then you got a new presidency coming in. My personal gut instinct is they're going to probably throw a wrench at Trump when he goes into office, and that could be a correction in the stock market. But that's just my gut instinct, my gut indicator. So
I'm not going to argue. I think that's kind of the way I feel.
Yeah. So because they're going to throw something at him and make it tough for him. So that's just my personal opinion.
Well, it's a good time to me. As you're, we're at the end of the year. It's a good time. It's a good time to think about some tax planning. If you've got some large positions in something that didn't perform particularly well, or you have a loss in it, you can harvest some losses now. But it's also a good time to think about diversifying. And one I'm talking to people now is, with PE ratios that are as high as they are right now, if you wanted to, especially in IRAs where you don't have a tax consequence for selling, you can take those funds and buy gold and silver with it. And that's one thing that you've taught me a lot about, Drew, is about how you can buy gold with your commodity account and avoid those enormous spreads that you have in the physical market. And we can help people with IRAs. Roll IRAs over into commodity gold or silver or a mixture of things.
It's interesting you bring that up. So the CME is launching a 1 ounce contract, which I think is going to really lower those spreads in that spot market. I'm not going to say significantly. I think people need to learn more about futures and the advantages of them, and really focus on those spread charges. Like I've taught you, the spot market with the spreads it's just outrageous, especially these hybrid trading accounts where effectively you're just transferring your money to the spot dealer. But the CME, I think, is addressing that, and they see it, and so they're going to offer this 1 ounce coin, which I'm excited about because it will give her a lower level of entry for other people in smaller accounts to start getting used to futures and then understanding how it works and the value proposition within the futures market. And that's why I kind of would say it's where the professionals are, but it's complicated, so it's hard to teach people how it works.
Everybody understands the stock market, but when we're talking about the commodities market, it's kind of like buying land or a different asset class. It's something that a lot of people don't have experience with, and they don't feel real comfortable with it. And I get that. But
I get it too. So well, good stuff, Steve. Pleasure talking to you this Friday afternoon. I hope you have a great weekend, and I'll see you next week, and we'll keep staring at these markets every day.
All right. Thank you, Drew. And you have a good weekend also.
All right. Take care. Bye.